All right, so now let's take a look at the FX momentum breakout strategy and how we apply it to the short side. So once again, for the short side, we look at two time frames, the higher time frame, for example, H4, and the lower time frame, in this case, H1. So again, how do we identify the pair in the first place? By looking at the currency strength meter. Again, buying the strongest, selling the weakest. So in this case, on a particular day, the yen was the strongest currency at 60 plus number, okay, green, and the dollar was the weakest currency on that day, coded in red, which is below 40. So we want to be selling the dollar and buying the yen. Okay, so when you look at the dollar yen pair, selling dollar, buying yen means shorting the dollar yen. So we're going to go short the dollar yen. So on the H4 time frame, we want to see again a very clear downtrend on the dollar yen. Okay, so the 6 EMA, which is the red line, below the 18 EMA, blue line, below the 50 EMA, thicker blue line. Okay, and the price has to be clearly below the 18 EMA. So the chart has to confirm the very strong downtrend on the higher time frame. Once we have got that, we drill down to the lower time frame, which would be on H1. So on H1, we're looking for that setup, right? That support and breaking below that support, waiting for that 50% retracement. So again, we're looking at the H1 on dollar yen. And for this example, you can see a strong level of support at 11093 thereabouts. Okay, so this line was a support, and boom, there was the break of that support. So we call that the strong impulsive wave down. So at the point of breakout, what do we want to see? We want to see again the clear downtrend. So upon the breakout, 6 EMA, once again, red line, below 18 EMA, blue line, below 50 EMA, thicker blue line. And the price clearly below the 18 EMA. So both charts have to align on both time frames when it breaks out. So once you've identified the support level and where it had started breaking out, again, where do you place your entry, stop loss, and take profit? Let's look at this graphic to explain. So there you go, right? So we have got this dotted line over here, which is the support level that we identified. By the way, let me just mention that very often, by the time I look at the chart, usually it would have already broken out, right? I would normally have seen that, and all I'm doing is waiting for a retracement to enter the trade. In this case, I'm entering a sell order to catch it as it goes down. So this level of support, we call it A. All right. And again, A is also where the price started moving down. Okay. So as it moves down, we are waiting for it to hit a low before it retraces. So that low, we call it the swing low, and we denote it as a B. So once we see that A and B, we're looking for that 50% retracement level to sell. So what do we do again? We take the Fibonacci tool. Now, again, normally when we're going short, when we use Fibonacci, we click the A, we drag it to B, correct? Now, again, for the strategy, we do the opposite. We click on B first, and then we drag it to A. So when you click on B, drag it to A, two levels will come out. The first level would be the 50% retracement level. Okay, and the second level that will come out would be the Fibonacci 161.8 level. So I would know to place my entry, which is again a sell limit order. So this order is a sell limit order, which means it will be triggered only when the price goes up to that level or higher. Okay, so I'm going to place my sell limit order at the 50% retracement. Again, I have to ensure that the retracement from point B to the 50% it is an enough retracement, a big enough retracement of at least 1 to 2 ATR. If there's a level of resistance over here, then 1 ATR is fine. But if there's no level of resistance, I need to ensure at least a 2 ATR retracement. Okay? Again, more on this on the MT4 charts to come. So I know where to place my sell order. I know where to place my profit target. Where do I put my stop loss? Now, similarly, in this case, I'll always place my stop loss above this initial support level. Because remember, when support is broken, it becomes resistance. So I place my stop loss above this resistance level as a way of protecting my stop loss, so it's less likely to be hit. And I can place my stop loss anywhere 5 to 10 pips above the resistance to give a bit of buffer. Always ensuring that from my entry price to my stop loss price, that's the 1 hour distance, right? 1 hour. So always ensure that my 1 hour is big enough, at least 2 ATR. So you have to look at your average true range indicator to measure 1 ATR. For example, 1 ATR is 8 pips, 2 ATR will be 16 pips. So ensure your stop loss in this case is at least 16 pips, for example. All right. And then we measure that from the sell order to my profit target, how many pips am I capturing? So for example, if I'm risking 15 pips and my profit is 30 pips to the target, so 30 pips divided by 15 pips would be a 2-hour profit target. Okay, so again, sometimes it could be a 2-hour, 1.5 hour, 1.6, 1.7. It is not fixed because the profit target depends on the Fibonacci level. So as long as you are making more than you are risking, then it's a reasonable trade. All right, so once again, let me review all the entry and exit rules I talked about in a checklist. Okay? And again, this is for the short setup. So first thing is to find the currency pairs with the potential to trade. So what do? We look at the currency strength meter on the higher time frame. So again, if I'm trading on H1, I look at the H4 time frame to see the strongest currencies and the weakest currencies. Buy the strongest, sell the weakest at the same time. So once I've identified which pairs to look out for, I'll then look at the charts. So first I check the higher time frame chart to ensure a clear downtrend. So example on H4, the 6 EMA below the 18, 18 below 50, and the price clearly below the 18 EMA. Then I drill down to the lower time frame, which in this case is the H1 chart, looking for the setup, the break and the retracement. Okay, so I want to see a point when the price is consolidating, right? And I'm drawing a support level like here, right? Price moving sideways. I draw that support level over there and waiting for a breakout. Okay, like I said, most of the time, by the time I look at a chart, you would have already broken out. Okay, but I'm waiting for retracement. Yeah, and at the point of breakout, we want to see the lower time frame. H1 again has a clear downtrend pattern, right? 6 below 18, 18 below 50, price below 18. So as it's moving down, I'm waiting for a swing low and a retracement. Okay, so the point of the break or the support is point A. I've mentioned that. The swing low is point B. So what do? I take the Fibonacci tool. I click on B, right? It says connect B, and drag to A, right? Connect B, drag to A on the Fibonacci tool, and it will show you two levels. It will show you the 50% retracement level, which is here. And that's the point where we will place our sell order. It will also show us the 161.8 level on the Fibo tool, which is over here. So that is where we'll place our profit target, take profit. Next, where do I place my stop loss? All right, so again, once you've got all that, you place your orders in. So place your sell limit order at the 50% retracement. There we go, place a sell limit order there. And again, ensure that this retracement that you see is at least 2 ATR. Or if it is not, it should be at least 1 ATR and hitting a strong level of support or resistance. So in other words, you want to see some kind of a support or resistance level here. It's hitting that level of support or resistance, and if that happens, we can take 1 ATR retracement. Next, where do we place our stop loss? Okay, so stop loss, again, we place it just above the support level, just above this dotted line. And the distance from our entry price to the stop loss is called 1R. Again, that's our 1R distance. That's our risk that we're taking. Should be at least 2 ATR. And we place a profit target at the 161.8 level, ensuring a profit target, a profit of at least 1.3R or 1.5R or more. That will be ideal. All right, so let's take a look at a recent example, and this is shorting the Aussie dollar on the H1 time frame. So again, how did I identify this trade? It started with looking at the currency meter on the H4 time frame. So on H4, I saw that the Aussie was the weakest currency on that day, and the dollar was the strongest currency on the day. So I want to be selling the Aussie and buying the US dollar. So that translates to selling the Aussie dollar pair. So then I drill down to one lower time frame, which is the H1, to look for the setup. So when I looked at H1, I saw the price indeed going down very fast. And I'm waiting for a retracement, right? So what's the first thing to do is to draw the level of support. Where was the previous level of support? Where would we put it, right? You can see it is obviously there at 7206. You can see a very clear level of support that is broken out, all right? So we have identified our point A. That's our point A. So as it's going down, what are we doing? We are waiting for a swing low and a retracement. We're looking for the point B. And again, sometimes we will never know the actual point B until it happens. Okay, so let's wait for, okay, there we go. Boom. So at this point, oops, the moment we have got this higher low and higher high, we can say, hey, this could be point B, right? So that's a potential point B. So point A is there. Point B would be the low of this candle, the swing low. What do we do next? We take our Fibonacci tool, click on Fibonacci, and we connect from point B to point A. So go to point B, click it and drag it to point A. So once you do that, you would see two things. First, you see the 50% retracement level and the 161.8, which you can't see because it's somewhere below there, right? We'll deal with that in a short while. First thing to do is to draw the 50% retracement level, which is there at 7184. Let me turn this into a dotted line. Okay. So this 7184 would be our potential retracement. We're going to place a sell order at 7184. But remember, we need to make sure that the retracement is at least 2 ATR. So what is 1 ATR? Let's put in our ATR tool. You can see that's our ATR, and at that moment the ATR was 13 pips. 13 pips, right? So is this retracement at least 13 pips? Sorry, it's okay. Now remember that the retracement can be 1 ATR provided there's a level of significance over here, a resistance or support level that coincides with our entry, but you know there's no support or resistance level, right? So because of that, we need to ensure it's a 2 ATR retracement. So 13 times 2 is 26 pips. So do we have at least 26 pips from here to here, from the point B to the 50% retracement? Let's do a measure. Let's take this and drag it. Drag. Okay, so in this case, it's about 24 pips. About 24 pips. So we're short of 2 pips, right? Well, what you can do in situations like this, which is what I did, was I said, fine, you know, then I'll place my sell order slightly higher at about 26 pips, which is 7188, right? So you could cheat a bit if you want to, right? So I could put it up to about 7188. That's fine as well. $7,188, right? Which corresponds to a 2 ATR retracement. Okay, so that's what I did. Now, next, where do we put our profit target? Again, it's below, you can't see that. So what we need to do is we need to drag the chart. Click on this, and you can see you can drag it down. You can see the drag it down, right? Okay, so my profit target will be at the 161.8, which is 7135. So there's my entry. I'm going to place a sell limit order there. I'm going to put a take profit over there. Now, where's my stop loss? My stop loss has to be above this level, right? This level over here, above 7206. So you could put 5 pips above 7211. Yeah, okay, 7211. There we go. Okay, so this dotted line, that would be my stop loss. And this would be 1R, which is the risk I'm taking. And this would be, well, we have to calculate how many R that is, right? Okay, so what is my stop loss distance? Do I have at least 1 ATR? Recall 1 ATR is 13 pips. So from the entry price to stop loss, do we have at least 13 pips? Let me drag. Oh, more than that, we've got 25 pips, right? So it's a lot more than that. So the stop loss is wide enough, okay? So my 1R, in this case, my 1R is 25 pips. Okay, and how much profit am I aiming at? 7188 minus 7135. $7,188 minus 7,135. 53 pips. This is 53 pips. So I'm risking 25 pips to make 53 pips. That is more than 1:2. So this is a very nice trade, risking 1R to make 2R. Okay, see how that works? Great. So once again, let me just draw that. So the sell order is there, sell limit order is there. Stop loss is over there. And my profit target's over there. Okay. So let's see if the price retraces and hits our 50% sell limit and the order gets triggered. Let's take a look what happens. There we go. So the price goes up, and so we are triggered at 7188, but went even higher than that. And boom, hits our profit target. Okay, so this is how you place your orders for a short setup. Okay, so let's take a look at some more trade examples. This was 23rd of April, trading franc yen. So this was a short trade on franc yen on the H1 time frame. So again, the first thing I did was I identified the trade on the H4 time frame. On H4, looking at the currency meter, found that the yen was the strongest currency and the franc was the weakest currency. So I wanted to sell the franc and buy the yen. So for the currency pair called franc yen, it will be selling the franc yen. So the first thing is to look at the charts on the higher time frame and then the lower time frame. So first, the higher time frame on H4, you can see on a very clear downtrend over here. Okay, so again, we have to see the 6 EMA, red line below the 18 EMA, blue line, 18 below the 50 EMA thicker line, and the price, the candles are below the 18 EMA. So clearly on the H4, it's a clear downtrend. Then we drill down to the H1, the lower time frame, to look for the short momentum breakout setup. Okay, so drilling down to H1, again, I'm looking at the franc yen, and I see this big red candle over here. So again, usually by the time I look at the chart, it would already have moved. It would already have broken out of some kind of support level. So what's the first thing I do? I draw the most recent level of support. So in this case, support level is drawn here at 110.17. So this is the support level over here. So clearly this was a level of support, very strong support, and it broke the support. So once it broke the support, I'm looking for it to retrace, enter at the 50% retracement, take profit at the Fibonacci 161.8. So first thing I do, I identify point A. So point A is the level of support, or wherever the price started moving. So in this case, point A is 11017. Then as the price comes down, I'm looking for a lowest point before it retraces. So in this case, it's point B. Point B would be the exact low of the candle here at about, well, I didn't actually write down the level, but it's about 10970 thereabouts. Okay, so what do? Take the Fibo tool and click B, connect B and drag to A. So once you do that, two levels will come out on your Fibo tool. First is the 50% level, in this case 110.02803. Okay, so this 50% retracement would be our entry price. We'll be selling, put a sell limit order at 110.03, and our profit target would be at the 161.8 level, drawn by the Fibo tool, that is at 109.70. There we go. Okay, so that's my entry, that's my profit target. Where do I place my stop loss? Will be placed again 5 to 10 pips above that level of support. So 110 and 17 plus 5 pips is 110.22. So that's my profit target, or rather that's my stop loss. Okay, so again, ensure that the retracement is at least 2 ATR, or at least 1 ATR if it coincides with a level of support or resistance over here. So in this case, it's about a 2 ATR. Okay, retracement over there. All right. So from the entry to the stop loss, that's 19 pips. So ensure that your 1 hour distance is at least 2 ATR. Okay. Profit target in this case is 33 pips. So risking 19 to make 33, that is 1:1.7. Okay, so that's a pretty good trade. So the price went up and hit the sell limit order, triggered the order, went a bit higher, hit the support level, did not manage to hit the stop loss, so we did not get stopped out, and then proceeded to hit the profit target. So, and that's why it's really important to place the stop loss above the support level, because that is the last level of defense. That if it retraces back beyond 50%, it may retest that level again. All right, so let's take a look at another recent short trade. And for this one, I remembered to capture the currency strength meter. Now, this particular trade was traded on the M15 time frame. And it was a short of Euro USD on the 3rd of May. So for this particular trade, I was looking at the currency strength meter on the higher time frame, which in this case, the higher time frame is H1. So on this particular day, on H1, you can see that the dollar was in green, strong, and the euro was in red, weak. So I want to be selling the euro, buying the dollar. So for the Euro USD pair, you'll be selling the Euro USD. So the first thing to do is to look at both time frames. Look at the higher time frame and the lower time frame. In this case, the higher time frame, H1, we want to see a very, very strong downtrend on the charts. Okay, so again, we've got the 6 EMA below the 18, 18 below the 50, clear downtrend. And the candles are clearly below the 18. So that satisfies the chart criteria. Then we drill down to the actual lower time frame on M15. Okay, so we've got Euro USD, M15. And again, we are looking for a break retracement. So in this case, this was a very classic setup. Again, by the time I saw it, it was already somewhere here, going down. Okay, so the first thing I do is to identify, okay, where was the most recent level of support? Okay, so I drew it at 1.1171, which is obvious here. You can see a very strong level of support. Okay, so this is my point A. Point A. So point A is 1171. Okay, so it goes down. I'm looking for a low retracement. Okay, so in this case, it went all the way down, and I figured this was my low, point B, which is about 11585. Okay, so once it hit point B, then I'm looking to get in at a 50% retracement. So again, click on my Fibo tool, click on B, connect to B, drag it to A, and I see my 50% level at 1164. Okay, so that's where I place my sell order, ready to sell once the price hits that level. Again, making sure that this retracement from B to 50% is at least 2 ATR, or it coincides with a level of resistance over here. Right? Next, where's my profit target? My profit target will be at 1150, which corresponds with the 161.8 Fibonacci extension level. So I've got my sell order, my take profit, finally my stop loss. Where do I place my stop loss? 5 pips above the support. So 1170 plus 5, 1175. So from my sell order to the stop loss is 11 pips. Okay, and again, ensuring that that is at least 2 ATR. on that day. So on that day, the market was had very low volatility. I believe the ATR was like 5 pips, 1 ATR. So 11 pips was more than 2 ATR. And my profit target is from 1164 minus 1150 is 14 pips. So in this case, I was risking 11 pips to make 14 pips. 14 divided by 11 is 1.3 R. So the risk to return ratio is not great, but risking 1 to make 1.3, making more than I risk. Okay, not great, but reasonable. So sure enough, my sell order is there. Price goes up, hits my sell order, triggers my sell order. I'm in the trade, goes up further. Again, you never know how far it's going to go. And then proceeds to come back down and hit the take profit. Now, I've got a common question asked by people would be, hey, instead of placing my entry at the 50%, could I place it at the 61.8%? Which actually corresponds to 38.2 if you flip it over. The Fibonacci 2, you flip it over, is about 38.2. Well, yeah, you can do that. Yeah, there's nothing wrong with that. The only thing is that if you place a sell limit order higher, of course, you get in at a better price, but sometimes it may not reach there. It may just retrace 50% and come back down again. So there's always a pro and con to everything. It's up to you how you like to modify the rules. There's no right or wrong as long as you're consistent. Okay, so that concludes the setup for going short on the momentum breakout.